It was October 2020 when I noticed that when I started saying the chart of Ethereum looks like it's going to outperform Bitcoin, I got immense hatred. I was like, okay, what's this all about? And I started to try and understand, okay, how do we price Bitcoin? How do we think about it? And I stumbled across Metcalfe's law, and it made total sense. I just think of this whole space as essentially behavioral economics. What you're doing is you're creating a network of people and incentivizing them to grow the network. So I understood that, and Metcalfe's law was basically that. And then when I figured out it actually applied to Ethereum in exactly the same way, I then realized it applied to everything in this space in exactly the same way, that it was all just network effects. And that gave me something to hang my hat on because I could then understand what was driving the market, how to think about valuation, what was a good project, what was a bad project. It was all about network effects. And I even learned to question what people think of as network effects by just stepping back and saying, okay, what drives the network? It's the number of nodes, the number of connections. Now, what happens if you have a network that's very one-sided, which is just the number of nodes? So investors in this case, or token holders. Well, Bitcoin's a bit of that. It's quite one-sided still. But there are protocols there are applications being built and, Lightning Layer and other stuff. But I looked at Doge, which was this meme coin. And I thought, I don't really understand this, but millions of people own it. And my thought process was, well, what happens if somebody builds applications on it? Then you're making the network more valuable. And lo and behold, Mark Cuban saw that too and said, I'll accept it for Dallas Mavs stuff. Yeah, that's a small thing, but it was a meaningful statement that a network can come any way. It can come from amazing applications like Ethereum, or it can come from a loyal ownership base. And Elon Musk then started on the whole process. Now, I don't know whether Doge ends up building true network effects or not, but it's interesting, and I've kept my mind open to what this all means.
And you basically observe that the same network effects that made, let's say, Facebook, Instagram, Twitter very popular can be replicated or are replicated in the crypto space.
Yes, and they have a propensity to move faster, which is why it's outperforming the internet, because you've created alignment of incentives. So with Facebook, you and I could use Facebook, WhatsApp, Instagram, and connect with our friends, grow our businesses, do all of those things. But we didn't directly participate in the network unless we own shares. But in a crypto protocol, you participate in the network too. So you're highly incentivized to grow the network or protect the network. And that makes it super fast adopting, which is why it's the fastest adoption of any technology in all recorded human history.
And how was this theory received?
People didn't want to believe it because they wanted to believe the narrative of Bitcoin or the narrative of Ethereum or the narrative of certain things. So people anchor themselves on particular narratives and they don't like it to be exposed as something somewhat different. The narrative, everybody has a different narrative in the end. But the network represents all of that. So it actually started to resonate. People started to go, oh, I get it now. This is what it is. And I think I probably made Metcalfe's law mainstream for people's understanding of what this was about by sheer determination of telling people, look, this is what it is. It's not just about the uniqueness of a protocol. It's like, do other people perceive it to be unique and can they create applications on it?
What you